All right, guys, what's going on? We'll get started in a second. Just give me a quick sound check. Let me make sure that everything is set up. Have my charts up. It's 4 o'clock, 4 p.m. I normally stream at around noon on Mondays, Wednesdays, and Fridays, but today I put it off. I had some stuff I had to take care of during the day. Quid sound check. I don't know what I just said. Quid. Sound is okay. All right, good. What's going on, guys? Before we get started, please hit the like button, hit the subscribe button. I'll give it another minute or two, just because I shared the link again on Twitter, and then we'll get into it. Hopefully you guys are doing well. Hopefully you had a good weekend. There's a couple charts that I'd like to take a look at. And yeah, we'll probably keep it relatively quick. I don't want to keep everyone for too long, considering that it is later in the day for myself, and I'm sure some of you guys who are tuning in. Although it might be early, depending on what time zone you're in. Okay, real quick before we get into it, shout out to the sponsors of the stream, CryptoWatch. That is the platform that you're looking at right now. I've been using this platform for a really long time now. I've been sharing it on the stream more recently, as of the last month or so. We're still waiting on their complete integrations across all of the exchanges to be able to actually trade through the platform. So it depends on what platform you're on. Like CryptoWatch is connected to Kraken. I can't trade on Kraken. Kind of asked out of a lot of things if you're a New York resident. But if you're trading on Kraken, you'll be able to take advantage of all of the features that they offer. You know, they have they have exactly what I'm looking for, honestly, and I'm getting kind of frustrated because I want to use it. But anyone who can use it, good for you. They have the ladders. So for those of you that follow me and watch me trade, like the last few streams, I've traded the S&P, I've traded the NASDAQ. I don't have those up right now because we are doing a later stream, even though I said I'd be trading more during the streams. Last stream I traded. But for those who've been following me, you see that I trade on the DOM, so I trade through the ladder. I think that there is a massive advantage of trading through the ladder, or for trading through the ladder. And not just for people that are looking for like ARBs or anything like that, but to see how markets are trading relative to one another, especially when you have people that are looking at how alts are behaving relative to BTC or how ETH is behaving relative to BTC. It's just nice when you could have these things up on a ladder to see exactly where the flow is coming in, who's pushing harder, how these markets are trading next to each other. If you're a scalper, nothing really beats it. If you're a manual discretionary trader and you're a scalper, if you're trading legacy markets, really the only thing you're focusing on is probably a DOM and a tape and some kind of footprint chart or some type of dynamic volume profile. So this is a phenomenal tool. They have more than the ladder. It's not like you need to trade through the ladder. I have this battle station set up that has the ladder and then has, your basic order prompt, but it's not a basic order prompt because they have a bunch of other features as well. Like they offer the ability to scale. So for those of you that use something like in silico charts, they offer something like that, where the same exact thing is that, and it's the ability to scale into positions. And you could do that very quickly from the DOM anyway. And I know that they're going to be adding a bunch of other features as well. So they'll be adding things like volume profile and, again, some of the more advanced trading features. It's just a great platform. They have the website, so CryptoWatch. That has a little bit extra that's not necessarily on the platform. I guess maybe it's not on the platform yet. They have like the correlation charts that you could set up, to see exactly how markets are correlated or how much they're correlated, be able to spot right away, maybe some good pair trade opportunities. They have like a news section, a performance section, and there's a couple things, again, that they're not on the desktop client. The desktop client, though, is phenomenal. Like I said, like the one thing that stands out about the desktop client, and this is something that you see right away, like if you're trading crypto, for most people are trading on the exchange, which sucks always. If you could get some kind of API access, that's always going to be better off. But then you'll trade on some of these platforms and they'll just like use up all of the speed and the memory in your computer. And you'll see that it'll just junk stuff up. And if you don't have a really high tech computer, like I have a really high performance computer. I mean, my computer costs like what a small 4-door sedan would cost. I've said like before, like a used Toyota Corolla. So I have a really good computer. It's probably a lot better for gaming than it is for trading, but again, running software, it's able to just absolutely cruise and take anything. But even if you're not, CryptoWatch just uses like no compute. I mean, it's like this thing runs like so lightly, which is awesome. And all of this it sounds like a shill, but it's genuine. Like all you have to do is download the desktop client. You'll see for yourself like how smooth it is. So they are the sponsor of the stream, powered by CryptoWatch. The links are below, whether or not you want to use the desktop platform or whether you want to use the web-based platform. And the higher up you go, you're going to see, like, if you use the trader package and you use the trader package and take advantage of everything, right? Multiple boards, a couple other things that they allow for, multiple exchange access for those that, qualify. And when I say qualify, I mean trading on exchange that you qualify on. It's going to be, I think it's upwards of $100+ maybe $125 a month. But listen, like, that is cheap compared to legacy trading software. Like if you're a serious trader, this is just part of your cost of doing business. You're running a business. That's what you are. You are a business by being a trader. And you have to think about your overhead and the things that you need to actually run your business, the tools you need. And this is honestly, if you're anything less than a longer term swing trader and position trader, like you're going to ultimately go towards these types of things. And then you're going to run into paywalls. And if you're trading legacy and you're trading on trading technologies, for example, which is basically like this, if you're trading on a TT or CQG, or I forgot if it's CQC or I forgot now. If you're trading on a Jigsaw, like all these things, whether you're paying for the licensing over the course of a year or in its entirety, or you're paying a monthly fee, you're talking about thousands of dollars. So, I mean, at the end of the day, what is this running you? A little less than $1,500 a year to have access to it? That's for the top tier, right? You don't have to pay for the top tier. Not everyone needs that. But I think the point is, like, if people say, like, can't you charge less? It's like, no. I mean, technically, they could probably charge more, right? We could also charge more. So, again, not everyone needs it, but I think over time, when you want to get to that point where you are a professional trader, you are trading for a living, and you're, again, focused on anything that's outside of like long-term trades, like you're going to want the best software you can get, the best, the fastest, all of that. All right. So shout out to them. There's a couple links below also for exchanges. Shout out to Bybit as well. I'm not going to get into the news today that was shared all across. I shared it and then I ended up deleting it because other people shared it as well. I'll let them release that. I've said many times now that all exchanges are basically going to KYC. Like, it's an inevitability in this market. The fact that it's been this way for so long has been a blessing for a lot of people. Yeah, some people are probably using exchanges the wrong way, right? They're probably money laundering. But I think most people actually just want access. That's all. They just want access. They want to be able to trade, XYZ dog fart coin, right? And it's not available on Coinbase. So they're able to sign up on exchanges that don't check your ID, and you're able to just sign up with an email address. I don't think there's anything wrong with that. I think it speaks to the ethos of crypto. But again, like, all this stuff is really unique to the crypto market, really unique, that you could literally just send like a small amount or a really large amount of money from point A to point B with like no checks in between, no clearing time, no T1, 2, 3, any of that. And that's, like, again, it speaks to the ethos of crypto, like no friction, no intermediaries. Again, self-sovereignty, control over that. But we're fighting, the crypto market's fighting a battle right now. And I think over time, like, as it integrates with legacy markets, like, this is just, again, it's inevitable. So, if Bybit is integrating KYC, it is what it is, right? I mean, if you've been trading on it and technically you're not supposed to trade on it, well, you're not going to be able to trade on it anymore. And this is just if anyone's been around a long time, if I'm talking about it lightly and it sounds like, oh, like, what are we going to do if we're not? Well, I mean, the only answer I have for you is you're not going to be able to trade on it if you're not qualified to trade on it. I mean, I remember whenever I used to trade on BitMEX, right? I used to trade on a ton of exchanges now that are gone. But it is what it is. Like, if you didn't have a way to get access to it, you were asked out, and you had to you had to settle for Coinbase, right? Or, again, not going to steer anyone in any direction, but certain people have, I guess, opened up LLCs and other. Again, this is not my area of competence. I don't know what to tell you to do other than you got to do what you got to do. Right? You have to follow the rules that you're supposed to follow. And again, this is not a conversation for me to have. All right, let's get into it. And before we get into it, I see someone asked, so Corey, about what do I look for in a ladder? I'm going to go into the ladder when I can completely use this ladder. So I've gone into ladders using the ES and the NQ. I will do a complete video for that when this is up and running with full integrations to crypto exchanges, because I want to do it for crypto and not for legacy, just because I feel like sometimes I do the legacy streams and there's a lot more people that are interested in trading crypto that are tuning in. And yes, all of these boards are available. They are available on, what's it called? They are available in the Discord. Let me just make sure that I give you guys a Discord link, because apparently maybe a link was expired or something like that. So I'll post this in the chat and then we'll get into the charts. So I'm going to post this, and you'd be surprised how many people can't figure their way into the Discord, even when I post how to get into the Discord. And it's like, some people, they want to trade, but they really can't think themselves out of a cardboard box. So that is the link, and you're going to go there and you're going to see there's nothing there. And then there's going to be a verification channel. And if you could read, you'll go to verification and you'll go through that process. And there's no process. It's literally like, make sure you're not a robot, and then you're in. And then all the resources that I share in there, Again, that Discord is not for me to just like chill, hang out, shoot the shit. I have a life, a child. Like, I just pack that Discord with what I think is useful. I hop in there when I can, and for the most part, that's it, right? But I've made it a really good Discord in terms of resources. And all of the templates for CryptoWatch are in there. They're in CryptoWatch, CryptoWatch Alpha. You'll find all the templates in there, and anytime I update them in the Discord as well. All right. Anything else? Yeah. So looks like it's the end of an era with Bybit integrating KYC, but I'll let them announce that. I think that is May 1st. There are still exchanges that obviously they don't require KYC. Phemex is one that still doesn't require KYC. So that link is still below. And the reason why I still have that link there is because you still get bonuses through there. So if I could give you guys something, the link is below, and it's tradephemex.com. And they still allow you to withdraw up to 50K a day, no KYC. And I don't think they have any plans for a while to do that. All right, so let's get into it. So real quick, just to, I guess, recap where we are. I created a new Twitter page. So you'll see it's Man of War. So Man of War is arguably one of the greatest racehorses of all time. I've shared it on my Twitter page recently. You'll see that it is the same avatar as my horse avatar, but it's inverted. So it's flipped. And I'm just using that Twitter page for setups. So just setups, just trades. I've been sharing trades and ideas on the Clark Twitter for a long time now. And it's kind of noisy because sometimes I'll just think about things out loud and tweet them out. I tweet my thoughts, and I'll think about something high time frame, and I'll tweet it, and then people take that as a short-term trade, and I'll tweet a short-term trade, and then people are asking about it a week later. So that Twitter is specifically for short-term trading ideas, and it is going to just stay up there. So it's curated, archived, and you could look at what position I'm interested in, what my watch lists are, all that. So I was shared my most recent watch list, which is actually listed right here. So we have Doge, Solana, Optimism, Aptos, ETH, and then we actually have ARB as well, which is not on here. I added FTM, so I'll make sure that I add ARB real quick. I think that was the extent of it. I was in positioning. I added to positioning and was already in positioning for a week now, going on a week now in Solana and Doge. I have render as well, so let me add that. I've taken that positioning off. I talked about this on that Twitter. I've taken the more recent positioning off in Solana and Doge. I still have a runner in render, so shout out to John because he's actually the one who pointed that out to me. I'm not going to take any credit for him. JW, I shared him on my Twitter. I shared him on that Man of War Twitter as well. He's the one who got me into RNDR. So this is my watch list. The reason why I took some positioning off is just because the way BTC and ETH are right now. I mean, to be fair, like the market has been really strong, right? We've had a really strong trend now. So just go to the high time frame chart real quick, or multi-charts. These are just today. So the benefit of CryptoWatch is, for example, I could just click daily and it's going to break today's session down into 15-minute candles. So as you can see, render's up, APT's down, BTC's down, ETH is down, Optimism is flat but down, flattish, downish. ARB, same thing. Doge is up on the day, and Solana is just slightly up on the day. I have to double check that real quick. Let's just see, make sure that this is by day, and actually this is down. So it's showing the day, excuse me. It's showing the day, but the day starts here. So Solana is down, Doge is up, like I said. Actually, ARB is basically flat. Same thing with Optimism, flat, probably a little red on the day. ETH down on the day, BTC down on the day, Aptos down on the day, and Render again up on the day. Render is up about 16% since I shared that on Twitter. But I think, so real quick, when it comes to alts, like BTC and ETH are at pivotal points in market structure. They're still in that zone. So for BTC, I started getting cautious from 28 up. So I mentioned this a couple streams now, so it shouldn't be No one should be confused. My zone, my first level of possible resistance and sticky point was around 28, right? So around 28. So we'll go back to that chart actually. So around 28, which is right around the underside of this little consolidation. That was the first consolidation that we made after breaking under these summer lows. So not a meaningful consolidation necessarily. And if we look at this on the weekly, it's a little thicker, a little bit more substantial further up. So the weekly chart, the highest or the level that might be deemed most significant, if you're looking at the weekly, would have been around 31.67. So I'd said between 31.5 and 32 would be an area where I'd look to take profit if we actually started accepting into this range or showed signs of strength and continuation. But I mean, zooming out on the daily is not something I'm just going to write off. So where the congestion is, where price had done business before, where we established value, the last major point before this breakdown into this larger range was right here between 28 and 32. So I'm not just going to write that off. So again, I mean, a point, just a line in the sand is kind of silly in this market. I think it's always good to establish zones. So here's that zone, right? Here's that zone where I think it really paid to actually either manage positions, take some off, monitor a little closely, whatever you want to do, right? It's up to you. You know, you're managing your own book. As far as for me, after the period that we've gone through, I don't want to just like get overly crazy through a level like this. I want price to prove itself. I want it to be constructive. You know, I've been in and out of hedges at the underside of that. I closed the hedge out during a live stream. I closed the hedge out during a live stream and caught like a 1,200 point move. So I think I closed it out right around, I said my invalidation was right around 28.4, and I think I got into the long during the stream, catching the move, and it was like, by the time we are paying attention, it was like 28.7 or 28.8. So I'd held that, and I caught that for a 1,000+ point move. So I don't think it was 1,200. I think it was like 1,000 points at that point. So that's great, right? Staying nimble. Had hedged like 3 or 4 times within the structure and had my invalidation. And when my invalidation came, I got back into position and I anteed up and took the trade I said I was going to be willing to take, which was close out the hedges. Actually, it was only to close out the hedges. They were hedging spot, so I'd sold futures against them, and then I ended up actually increasing my exposure during that stream and longing it. So that was done live. And again, this whole area is just, it's an iffy area, right? I mean, the setup within this structure, arguably the best setup is expecting that, getting back within this range means that we're going to trade from the low to the high of the range. So see price develop value within here, similar to what it did previously. It's an accepted area. And then hopefully be able to transition to the high of the structure, right? It's a carve out. So up to around 32. And, it's just another small range to trade within. The most meaningful level on the chart is actually accepting back within those summer lows. So we're not exactly accepted back within those summer lows. Going back to, it's basically we're going all the way back here, right? So going all the way back to, that's between May all the way up to July. We're just barely breaking within that right now, but there's no substantial acceptance within that. The acceptance within that is back above 32, right? So with BTC right here, with ETH, again, ETH made a move outside of its higher time frame range. BTC had already front ran this. ETH was lagging. This is quite significant, but stalling right at the level right now. No major expansion. I mean, you want to see that if a level is really significant, the market's going to prove it, right? If we're all focused on a level and that level comes and the market doesn't really do anything through it and it's just kind of chilling. I mean, just imagine it's like, you were like, you had a line in the sand in this case where you would want to see a big pickup in participation. Like you pulled the trigger at the race line and no one jumped, right? So, I mean, it didn't look like anyone was too eager to get involved at this break. And it makes sense because BTC is doing what it's doing. And also, more importantly, Legacy is still under that 4,200 zone. So, this is, again, everything is in kind of a tough spot. I mean, you have, for example, like today, just look at today's session, or look at just the last few sessions in the S&P. So going back to the 13th, I mean, we had that pullback that I said we were going to pull back and develop value and chop and consolidate. We've definitely done that. If you just look at today's session alone, I mean, it was up, it was down. It looked like it was going to puke, 50 points lower. And then now we've reversed at the end of the day. And we're not only, banging into the close, but in after hours, the market is completely undoing all of the price action from earlier. And it looked completely one way at the start of the session and into the midday. So, this is it's a weird spot, right? 4,200 is risk on, in my opinion. 4,200 S&P basing out above 4,200, risk on. I mean, this has been ignoring all bad news, right? Today the dollar is up, yields are up, and the S&P is still just like shrugging it off. Same with the Nasdaq. So if this being above 42 is constructive for crypto, right? Crypto majors are at high time frame levels. So do I really want to get too aggressive right here? I mean, you got people calling for alt season, and I don't know. That's a crypto thing, I guess, a crypto Twitter thing. But I don't know if I want to necessarily get positioned for alt season when both of these are like at their level rather than through them. When the S&P is at its level rather than through it. It just seems like it could go either way here. And if it goes up, right, it's possible that we see, let's say BTC breaks 32, ETH breaks 2K significantly again, or we're above 2K. ETH breaks, its highs to, 2141, and we're breaking out. That's something that could end up hurting most alts, right? At least initially. And obviously the same is true if we have a larger flush. So this morning we had a pullback, and again, as I mentioned, those alts were flat, the ones that I'm looking at, but there are a lot of alts that were not necessarily doing too well. So again, just not necessarily an area where I think it makes sense to take too much risk while we're still just chopping around here. If we look at, so the last couple of days I've been pointing out that BTC open interest has been down. BTC open interest is pretty flat. This is ETH open interest, but if we look at BTC open interest, so if you just go to a chart, you open up a chart module and we'll type in BTC open interest, and we want to do Binance because it's going to lead the market. So USDT perp open interest, you can see we're basically back at lows. So we're basically back at lows going back. We're talking about beginning of the month. We're talking about March, going back to February. If we're going to treat this as a range in participation, like where things get overheated, where they get reset, we're closer to the reset in local terms, looking at Binance, all right, which is good. There's still obviously open interest across the board on their other exchanges. But again, I think, a build up on Binance is going to be most troubling, especially if the market starts to lose levels. So this is good, right? Because it is kind of back to baseline, at least locally. But funding, if we look at funding, this is down here is, again, I've switched this over to ETH. If we were to go back to BTC, I mean, it's gone from a period of being persistently negative in pullbacks. So we're talking about, we're going back into early April, we're going back into the end of March, where there were those little corrections and funding was just like going negative right away. And then you'd have a pump and it would reset. But, you see sort of the trend lately. So the trend in this local move, so this little consolidation above 28, it's that we're not really catching that much aggression to the short side. It looks like, we're more baseline than anything else, which is, it's possible that maybe we're building some longs at this point, or just market's not as aggressive, as interested in selling this level. But also for the buying that's coming in, it's not really taking us anywhere. Spot is still holding up. So if we see, for example, like Coinbase versus Bybit, if we see Binance versus Bybit, or Binance versus itself, more importantly, Spot's still trading at a premium to perps. So that's good, but it's not as wide as it was. So that stands out. But more importantly, as I said, BTC open interest is kind of back at flat levels locally. But if you look at ETH open interest, so ETH USDT perps, it's a bit of a different story, right? So ETH open interest, and I'm going to leave these as BTC down here. This is ETH's price. ETH open interest is still pretty elevated. And if we look at just where this coincides on the daily, what would you kind of guess is the cause of this run up? Is it sellers or is it buyers chasing this for the breakout. I mean, if you look at this structure, I would say it's arguably a good amount of longs that have come into the market. Again, this is ETH's predictive funding still down here. It's flat, neutral, positive. Again, at an area where you could expect maybe a trap to occur. So a little bit elevated, it is maybe the area where we have to look for leverage in the market because, again, it isn't necessarily the case that it might be just isolated to BTC right now. I think if you look at ETH right now, it's still trading. I think ETH futures are still trading above everybody else in terms of volume. So ETH 24-hour volume is higher than BTC 24-hour volume. And I think that that's specific, though. That might be specific to Binance. I got to double check that, actually. So if we just I'm just looking at my futures charts. It's actually back down. So BTC open interest is higher than ETH, and now volume is higher than ETH as well. So that must have flipped in the last day or so. So either way, the market was more interested in ETH. Last little thing I'll point out, just bigger picture wise, if we go to, this is not on the CryptoWatch platform, but this is something that I look at quite frequently. This is dominance by open interest. When it pinches like this, it's never usually something that's positive, unless you think that this is occurring because alts are getting more attention for a new trend. But when BTC, right, and alt open interest pinches, so alt open interest rises, BTC open interest drops, the sharp ones where that's occurred have usually been before larger flushes. So that's something to consider. There is still maybe a decent amount of leverage in alts, and I don't know where necessarily that is. Maybe it's in ARB, maybe it's in there's some of the more hot pairs that maybe have captured most of the market share. But again, all these things considered at the level we're at, I think that you just want to, temper expectations and just kind of wait, right? If the S&P, if I was going to extrapolate based on this, the signs of strength, I mean, it kind of looks like it's going to break above 42. Like it really wants to. I mean, it's recovering after a morning like this morning to recover again. Not getting slippery when the dollar is up again above 102 and yields are up significantly to 2 and the 10. Maybe this is just shaken. All of the sellers out of the market. I don't know. Maybe we're still squeezing some of that short positioning that has built up and is at record highs. I will say that I feel like it's time is of the essence at this point. This is probably this is like peak flows week, I think, before, sell in May and go away, right? So we have possibly, you have earnings, you have sell May, go away. So I don't know. I feel like it has to do it now. Otherwise, sell May and go away their seasonality is real, right? If you ask any market maker, they'll tell you. But sell May, go away. I mean, it's not like markets haven't trended during summer months. It's just that it's definitely not the case that it's more common than not. And most importantly, during summer months, just volume participation just drops off. And again, I went into this last time. It makes sense, right? I mean, people are not spending their time at the desks. I mean, people are taking time off of work. The larger players are vacationing. I mean, it's just not the best time to be actively trading. The only time where it was really good, was significant it's not the only time, after COVID, but there was a ton of liquidity injected into the market and no one could do anything else either way because everyone was prohibited from doing all their typical activities. All right. So just looking at BTC locally, there's some of the levels I'm looking at. So this whole area is an obvious sticky point. I think there's a good amount of, I don't think you want to write this SR flip off. So I am still short BTC. I shared my positioning 2 days ago on that Twitter. I was short from 30,004. Actually added to that, so it's averaged down to 30,003. Again, that's mostly just a hedge. But the way I see it right now, I mean, this is possibly an area where you could expect a bounce. So I think that we have this breakdown right now below these lows, so below 29.8. We're retesting what is, it is technically a gap. So if you're looking at like a TPO chart, again, you could see the same things looking at a 30-minute bar chart. Just an area where on the 30-minute candle chart, there is no other interruption by price movement. So this last wick, this high of this next rotation, the area in between that, so this box actually can be moved down a little bit lower. That is where your single print gaps are going to be. And usually that's, it's a combination of stops being blown out, aggressive positioning added. But a lot of times this is the area where you look for a response on the throwback. You'll have people that where there were stops that were blown out, there are definitely people that didn't stop out and are still in position. So you'll look for that. If you return there from the underside for that selling pressure to pick up as people try to get out around break even. So this is kind of a good area to look for that cutoff. You can see we rotated back up to it, rejected so far. I think that maybe we throw back a little bit higher and then we just continue down. So personally, I mean, is it this area that's going to be the pullback and that's it? I don't know. I wouldn't write it off. I mean, the first thing I would want to see, though, is that we're trading back above that gap. So in the short term, if we're talking about acceptance back into this range, I mean, we really have to trade back above this low, which coincides with that gap high. So that is right around 29.8. So if we're back in there again, and we have, I've been using this term because I think it's something people can visualize, just constructive price action, right? Constructive meaning a series of higher highs and higher lows, right? Microstructure looking decent rather than sort of wimpy price action and no sort of jumpy responsiveness. Constructive as in building a base. If not, I think that this is probably, I think ultimately we probably retest this 29 region. The 29 region is the next area of single prints. So that's the first gap that we created on that breakout. So there's a good amount of liquidity down here, I'm sure. I think that this whole 28 to 32 region is an area where you probably had a good amount of de-risking, good amount of hedging, good amount of outright selling. So again, this gap up here is a good amount of stops you can imagine were blown out above this high. So if we come back down to that 29 level, it's not only, market structure highs, prior range, but it's probably an area where you'll see a rebid just because of that position and getting out at break even, right? Or as close as possible to, where it was tagged on. So, I mean, that's kind of what I'm looking at. I mean, I'm either looking at above 28.8 or right around that 29 to 28.6 level. As long as we're above that, like I'm not going to outright short anything. Again, all I am right now is spot hedged. I'm not outright short. I haven't taken any exposure on top of my exposure. As long as we're above these levels, right, or above this level, I can't see a reason to get overly aggressive on the short side. Like I know some people right now are like Chimp calling for like a complete and utter destruction of this chart, which is fine. Like it wouldn't be surprising, right? It's done that so many times where it's completely reversed and broke down a structure that was, getting everyone and their mother bullish the night before. But I mean, there's a couple points like before that, right? So it doesn't make sense to start thinking that far. This has been completely spot bid. There's been no froth. So that's important. So, I mean, you're implying that spot's going to sell, or maybe a good amount of leverage in ETH would come out, or maybe it's, again, there's some FUD with relation to government BTC and them selling, even though they sold back here and that was completely absorbed. My point is, like, can it break down? Yeah, but I don't think you want to start really entertaining bigger pullbacks until after that 29 levels tested. And maybe it doesn't even get tested. That's the point. If we start accepting back within this prior range, that's a different story. Maybe I'll start looking aggressively for shorts back down to that 27 region. And then other than that, you still have like the top side of this structure would almost all but guarantee it would offer some kind of bounce, right? I mean, it is technically the most significant level that we flipped, 9-month long structure, so yeah, it should offer a bounce. The flip side of that is like most obvious technical level, best technical level, right? The most obvious support that you should bid. But if the market is so bullish, why is it coming all the way back down here, right? I mean, if the market is really bullish, you shouldn't really have anything but shallow pullbacks. So market structure on the daily hasn't really broken, right? We haven't broken any market structure on the daily up here. This is possibly a higher low in the making. Until we have something like that, some kind of major reversal, for you candlestick closers, some kind of 4-hour close back within the structure, I just think that you have to deal with these immediate levels. It just makes sense to. It doesn't make sense to get overly bearish up here, especially if the S&P is just continue to push up like we're seeing. So we're dealing between this gap and that gap. So 29, 28, 28, 5, 6, 28, 29, 6, excuse me, is where we retested last. It's possible, we could clear this. There's maybe a short-term trade from 29.6 up to 29.8. So just meaning like if we're going to, one sec. If we're just going to continue grinding up, accepting into this gap, a lot of times you just kind of smoke through that, at least to the other side. So maybe we do something like this and then reverse. Although with these types of structures, a lot of the times when you have these kind of lower highs into the breakdown and you have a reversal like this, usually it sends up to the high, right? And then what you would look for is most bullish situation would be treating that structure as support. Better yet would be treating the high of that structure as support. And then you're probably going to get a quick zipper back up. But that's where we sit right now with BTC. ETH, again, as I said earlier in the stream, like just kind of hanging out around the level. Not the best thing. Again, if we just go back to BTC when it broke its major level, go back to, like, for example, that was down here. So when we broke 25, there was a couple times we tapped it months ago. But when we broke it over here, you could see the point was you had a very big move through, right? A very big move through. You get a lot of people that maybe think swing failure, but there was a lot of volatility there. Whereas with ETH, waiting all this time, getting to that level, we look at this on the daily, and it's, you break through that highest daily close. You had a big move through. But immediately pulling back, no like hyper volatility that you would normally expect. This kind of action where you rip up, rip down. It looks like there's possibly a reversal in play. You build up a ton of short interest, and then that helps the next move higher. I don't know. There are consolidations that are corrections, but where the market sits now, where BTC is ETH about to just do that out of nowhere? I don't know. This was a good move through. I actually looking at it now, that was a good move through that 2K level. But now we're just chilling up here. I think, I don't know. I think it just pays to be a little cautious. As far as alts go, so JW pointed this out. If you just look at this on the daily, most logical target at the break of this high, so when price was accepting above this pivot and you have this nice grind upward, the area where you would reasonably expect price to pump to would be the high of this move. So do you want to get too aggressive here? On the weekly it looks really good. Like this looks like something that's about to leg up again. High time frame, but do you want to be buying that high, or you want to be buying something a little bit more reminiscent of some kind of pullback, just because we're kind of vertical into that level now. So first test of this level, I just think a lot of times first test from a distance, this is multiples ATR at this point. A lot of times first test from a distance is gonna what? It's gonna spike, chop around, and then you probably spend more time than you would expect at the level before continuing to push through. And again, this all kind of depends on what the rest of the market is doing. And if it stops depending on what the rest of the market is doing, that's great, but not necessarily there yet. ARB. So Arbitrum obviously completely reversed after the airdrop. I think this is going to have a much larger accumulation range. Yeah, I've gone over this before. I've said many times before how you have maybe a month or two of a pump. So if you sell too early, that's stupid, right? Because you're almost always going to have some kind of pump. And then you have a much longer, like I've drawn this a ton of times, you get a pump and then you get a multi-month range and reaccumulation just because everyone's already up like tremendously. But I mean, looking at this on the daily, you have this flag on the high time frame. Is this distribution right now? You know, it looks strong, but again, everything I think depends on BTC and ETH. So when ETH is up, right, and BTC dominance is dropping, and we see that a lot of alts have their open interest already kind of floored, that's good when we have some kind of tailwinds. But I think that, again, I'm getting a little bit of like, you have people calling alt season, which is, I don't know. You know, we had a good season in January and February. So I'm just a little bit sensitive to that idea. Check the chat in a second because I haven't really looked at it. So all of these, I think you still want from price. By the way, what you see in this chart is just standard deviation bands. So 1.5 and then we have 4. So in a really strong trend, you're going to see that you're going to be holding above that 1.5. So we're looking at this on the daily. But you'll see really strong trends intraday over the span of weeks. You'll see we'll hold that 1.5. So that's that sort of darker blue. It's not, it's actually, I don't know if you call that darker because the other one has a less opacity or more opacity. But so while optimism looks good, for example, and a lot of these have their so the problem is funding is kind of elevated across the board for alts, but open interest is not necessarily like that blown out. So if we go to just use optimism for an example, we go to optimism open interest. I don't know why that's it's not listed on Binance. Go back to that. Yeah, it should be. Or is there no perp listed? No, it doesn't make any sense. One sec. Or is it? There we go. Binance OP USDT. What is going on with that? That's annoying. Can I find it this way, or there's just no chart for it? That's all right. I'm pretty sure. I mean, if I go on Coinalyze, just double check that. You guys can ask questions. Just optimism. Aggregated yeah, I mean, yeah, so open interest is kind of flat. So we had a significant spike up in the end of February, but it's been kind of flat. So I mean, it's a good sign when you don't have a lot of, you know, a significant buildup in positioning. I mean, it's a good sign also if you think of not just from a leverage standpoint, but from possible dry powder standpoint. Like if not a lot of people are committed to futures, then you possibly have some more aggression to come into the market. BTC being spot led is a good example of that, right? Because technically it's not that frothy yet in derivatives, and they're going to help the trend at some point. They always will come in, and then you'll have periods of prolonged positive funding where you shouldn't sell anyway just because there's just more buyers coming in, right? But even this, for example, like this high time frame wise on the daily, you want to see it hold outside of that 1.5 standard deviation band. And then I want to see market structure, signs of strength through market structure, right? So just a combination of those things. Similar to what you had back here, you had this consolidation. This was in November and December, right? And then the market was able to push through those bands. So just, this is, so to bring this full circle, these bands are using ATR. So you guys know how I talk about ATR being something you could use to determine whether or not something is noise or whether something is signs of change coming into the market, you know, against previous norms. So when we're pushing through those bands, again, it's something that stands out relative to prior norms. So if we're taking a level like that, if we're trading into a level like that, it might mean two different things, right? So this, for example, being a good example of that, right? Strong trending move, holding that band through a level, holding the level. Again, just doesn't make too much sense to get aggressive with the setups right now, even though things are, you know, looking good. Strong move up, possible sideways correction, but I don't want to call that until I see something like this, right? At least even locally. You know, APT is kind of similar. You know, high time frame, you could look at maybe like FTM and say this is the beginning of FTM, like correction, big move up, much bigger move to come. But you know, there's maybe a couple of ways you might want to define this. So some kind of trend lines to govern, you know, whether or not we're beginning to start floating higher or at least stop correcting lower. So clearly this is moving sideways now. You don't need that diagonal trend line. But still within, like, this is within, at this point, we're going all the way back to beginning of March. We're still smack dab in the center of a range. Right? You have a little SR flip here locally. But I think with these things, like, you want to see that you are picking a side out of these ranges. So this, again, would put us through that 1.5 standard deviation band above ATR. Sign of strength coming into the market, closing above 14. I just think you have a lot more certainty on your side at that point versus buying at fair value for what currently is fair value. Solana's like same story. Like I got aggressive with Solana. This was last night or yesterday. And then I was thinking I was, you know, part of a breakout in progress, and I ended up just pulling off that positioning because, again, it didn't happen fast enough, and you could see that it didn't happen at all because we're still below that level. And this 25 level, I think 25, 26, I think clear move above this, whatever that is. What is it? 26.31. You know, it becomes really obvious to the market at that point that this is breaking out of that range and we should see 30. The problem is, like, it's easy to say that, right? But it's the same thing as ETH. ETH breaking out of a high time frame range and no major excitement. Market might just be kind of exhausted right now. So this whole area clearly rejecting price. Trading above that, you know, is 30 a near-term target? Yeah, but I think at that point you're looking, you know, what you do is start trading back within this previous range. And then creating a range again back within there. But it's going to take a lot of lifting to move these, right? I mean, if you look at Solana, like what's the market cap of Solana? You know, we're talking about moving to 50, you're doubling that. I mean, if we're looking across the board and Solana's going to double in market cap, that probably implies that a lot of, I mean, Solana is what? What's Solana's market cap right now? Solana is like 10 billion, right? So if it's going to go to 20 billion and we think of like XRP is at 26, Cardano's at 15, if Solana is going to go to 20 billion off of just a technical move, everything else would probably be going up a lot as well. And then we're looking at, I mean, is the market ready to put in that kind of move across the board to lift these? So I still think it just makes sense to be a little bit more short-term oriented with these setups. I mean, I think the market obviously would get really horny if ETH BTC breaks out of this range. We've been in that range since 2021. I mean, that's quite significant, though. You're talking about a major change. You're going to have flipping conversations at that point. At that point, you might even want to buy BTC, unless this is just a massive momentum trade in progress and a fleeing of BTC. But I think that it's paid to buy BTC at these highs and sell BTC at the lows, or anytime we've had even locally moves like that. Any questions, guys? I'll probably wrap it up soon. I wanted to keep this short. I think the main thing I want to communicate, though, is tempering aggressiveness, just because we are in an area where strong moves in either direction could probably hurt alts. I think it makes sense to look at alts as we're retesting 29, if we're coming back down to 28.6, 29. If we're going to get that bounce in BTC, then I think that obviously you want to be in the pairs that have been strong with BTC. And if we're seeing a bounce in ETH as well. Again, if that level gives and we're trading back within this value, if we're trading back below 28.6, you're just looking at that 27 level again. I don't know if that's, like I said earlier, these are technical levels you point out as areas where you could expect a bounce, at least in the short term. But this is where you look at it on a 1 hour and up chart to see development. Because the truth is, and you want to see something strong here, at least really strong offside positioning, like shorts getting really aggressive and funding blowing out negatively, or just price action showing signs of strength. Because otherwise, let's say we did come all the way back down here. My point is, really strong trends should not, even just accepting back within this range, if you have something like that, we're accepting back below 29, 28.6. You throw back, attempting to reclaim the top side of that structure, you fail and you're back within. You're probably looking at much lower, right? You can probably immediately just look at 27. And then, what are the odds that if it's bullish, it shouldn't break back within market structure? Because then you get something like this, right? Where, as I said in the last stream, from just a 50% retracement standpoint, which is something you see often, you have a good amount of confluence back at that 25 level, right? Between 50% of this move and market structure highs. And I just, if we if we're having trouble at 27, that could happen pretty quickly. Just because it starts to look like it's rolling over on itself. But like I said, keep things, I think just stay kind of nearsighted right now just because the levels are right here. Nothing really stands out. There's no major spoofing. Never mind that. Look at this. 31 million on the offer on Binance Futures just pulled. 1 million on the bid on Binance Spot. 31 million is quite significant, right? They're gone now. I wonder if they're going to flash back in. Let's increase the aggregation on this to $5 buckets. Yeah, they're back at 29,460. 450. So something like this, honestly, what are the chances that they're trying to push the market down? What are the chances they're actually trying to get filled? I think, when you see this, I immediately think buy. When I see it on the bid, I immediately think sell. Just because the chances are I think that this is trying to force the market down to bids below. So it's actually good timing that we tune this in right now. See, now jumping right on top of price. So it's just odd. Last time we had that in the bid, it was propping price up, and then we nuked. So 30 million in the offer. They don't want to get filled. They don't want to get filled for a short. They're not trying to have you trade into them so they could fill. Like, they just pulled. As price popped up, you see how that they removed it. They were at 29,450. Price moved up, and they're gone. Certainly, someone didn't just buy 30 million contracts worth of BTC. So that's something to keep in mind, right? So we just see that, and we know where we sit within market structure. Now, they're spoofing, right? So maybe they're trying to fill bids at a level that we know should offer a bounce. So 29. So maybe they start buying into this instead if they don't think they're going to get filled. I do think that this is a good, either, again, a good long like that. So if we have, so go down to like an hourly chart. Either you have something that looks like this, a flush and quick reclaim. So we come close to that gap and we reclaim. And then I think that you obviously target that high initially. And then if this develops sideways and you're looking at like an hourly and 4 hour above, that's probably your low, right? You're probably moving up again at that point, whether it's just to retest the highs. Or let's say we start seeing buyers come in aggressively and we're trading back above 29.6, like I said earlier, in which case you might look for that gap to close immediately. But this thing kind of more often than not overthrows. So just be mindful that this can easily turn into that the same way that occurred down here. We're going far. Hold on one sec. You know, you didn't really have any development down here. Not much development. This is a daily chart, so it was more substantial. But the point is, we came into a level, quickly responded out of it, and the market was much higher shortly after. It wasn't like it required us to continuously move sideways. So I'm saying if it's happening, if it happens like that, if we start trading above that and we're above, you know, if we're back above 29.8, I mean, what are the chances this just flushes and then does something like that? I don't know. I don't think it's as likely as if we're back above 29.8. That was probably the pullback, at least in the short term. This is a really clean range. And then you're looking at something like the midpoint, at least at a minimum, being retested. 29.8 to 30,005, 30,004. And then maybe you get that overthrow. So T1, T2. That's it, though, guys. I think I'm going to wrap it up. So if that occurs, so this is I think I don't, as I said earlier this morning, some alts have gotten hurt in this pullback, but the alts that I'm actually looking at haven't really been hurt. If we look hourly chart for Doge, right, or just go the multi-chart because this has my watch list on it. So again, from today's session to start, BTC down, ETH down, Optimism flat, ARB flat, Doge up, Solana down, Render up. I think that honestly I'm picking these to focus on. Right, is that everything? I don't know what I'm doing with that. Those are meaningless, just marking the spot, right? BTC pulls back, shows signs of constructive price action. We like that term lately. I'm looking to get involved in these pairs, right? If BTC continues to moon, I want to keep an eye on these. If they're not losing their legs right away, same thing. All right, that's it though, guys. Thanks for tuning in. Shout out to CryptoWatch. It's a phenomenal platform. I mean, you could tell. I changed up the color. I hope you guys like that because I don't know. I'm so used to blue and red. It's just like an old theme from Trading Technologies. But there's so many other themes here. I mean, the whites are way too bright, right? But you have like a Hasaka theme, dark pearl. But I don't know. I think you keep it classic. It's actually pretty nice. That's it, guys. Though, check out CryptoWatch. The links are below. Like I said, I don't want to make any announcements for them, but it looks like Bybit is going to be integrating KYC. So if you can't KYC, your only options are really Phemex. So there might be a couple others that are just janky bullshit exchanges, but Phemex is the only one that I trust, and that link is Phemex, tradephemex.com. It's actually in the description below. So that's it, guys. Thanks for tuning in.